Taking a look at today's interest rate markets, I want to focus on the 10-year note today. Boy, we saw quite a reaction in the interest rate environment today. A big move across all durations. Certainly look at the longer durations. We're seeing a significant move now, actually going back several months when you look at some of the price action. Now today we did see the 10-year under some selling pressure, actually touching on that December contract, the 127 handle briefly, settling in the low 128s. But when you look at the price action, we did see a high yield intraday of 1.973. So again, we're continuing to see now the rotation, I should say, of some of the market action as we continue to see the rotation taking place after central banks are getting through some of their meetings here, and we're not seeing a lot of activity there. We're seeing most central banks and the Fed putting interest rates on hold for the time being, and I think that's why you continue to see this selling pressure on the 10-year note. Now, the 10-year note has been down for the last 5 days, so we continue to see this downtrend being realized. And we look at some of the reasons I believe that this is unfolding, not to mention what I just talked about the Fed and central banks, but also the data points coming out. We did have some more development of the storyline between U.S. and China today, where it appeared that there were going to be some further rollbacks of tariffs. Now, initially that was priced into the market. We did see it priced out of the market in the afternoon because there was no real confirmation of that. But nonetheless, we still saw the 10-year down quite significantly on the day. And when you look at the trends in place now, I think you got to point out that the 10-year and the 30 and the longer end of the duration is significantly breaking down from those September high or lows, I should say, and we continue to see now more technical damage, more fundamental damage within the space now that the markets are adjusting for the probability that the Fed and central banks are maybe not going to be as active moving forward. So when you look at the price action here, we're looking at a 10-year at basically the lows from July. That's a 14-week low in the 10-year pricing structure, breaking below some of the support levels here the last month or two. So now we're going into some uncharted territory when you look at the fall action, and it appears that there could be further downside here if we continue to see some of the economic numbers trending in their positive direction, as well as the trade narratives.